Tuesday, May 14th, 2019, Maneco 64, home of alternative economics and contrarian views. So Billy is back today, and before I start, I'd like to thank everyone for their continued support of the channel. This channel has been going on for over 3 years, started from 0 subscribers. My goal was to talk to the people out there, just how I used to speak about markets, economics, geopolitics to my clients in the city of London. And a lot of the stuff I talk about is controversial in the mainstream, about economics, about the monetary system, geopolitics. And believe me, I used to speak to clients that wanted to listen about these things, and I still have contact with them, and some of them still listen to what I say. I just got a call the other day from another call. Well, he was a client, but he's become really a friend, and he said, "Oh, Mario, I still got my gold and silver. I'm holding on to it." And if I told you where he works, you'd be like, I'm not gonna say where he works, but he works in the city anyway. Yeah, so thank you very much, all the new subscribers, new viewers. Yeah, and keep leaving the comments in the comment section. I'll try to answer as many of them as possible. Suggestions are great as well. I'm sorry if I don't act on all your suggestions. It's difficult. I try to stick to what I'm thinking. Sometimes suggestions are great, but I can't reply or answer to all of them in terms of a video. So yeah, the markets are getting very interesting. Yesterday, we continued the move lower in the stock markets from the previous week. The Dow was down over 600 points, or 2.4%. S&P was down about 70, also 2.4%. NASDAQ Composite was down 270, or 3.4%. So yeah, we broke some key technical levels. Is this it? How does a crisis evolve, in my opinion? Well, in our current easy money, fiat currency based system, what happens is that credit becomes huge, because it runs the whole system. Almost every business is run on credit, on a thin margin. So, and all that credit, that debt, is collateralized. It has, how can I say, it's backed by other financial assets. So if we see financial assets imploding like they are right now, it could have a huge impact and trigger a lot of failures, I would say, for all kinds of companies. I think it was Warren Buffett who said that when there's a recession or the market's correct, you can see who wasn't wearing anything because the tide goes out, and there's a lot of people out there that are naked, and that's the problem with what we're having right now in the markets. One of the sectors that has been talked about for about 6 months or maybe more is a new kind of credit called leverage loans, just direct loans to corporations from the banks. And the other thing about credit, and I highly recommend The Big Short, that you watch The Big Short. It's a great movie. It's all the derivatives. Derivatives are really the big problem for this system. At the same time, it's what keeps it going, because it allows the powers that be, Wall Street, the central banks, to kind of control underlying asset prices. What do I mean by underlying asset prices? Well, underlying assets, because derivatives are only, they're just leverage bets on underlying assets. And to keep the system going, to keep inflating this credit bubble, prices need to be under control, and derivatives are used for that, be it futures and options, or, exchange traded derivatives, be it over-the-counter derivatives, which are traded, you call your, the broker, or you call a bank, and they make up, they draw up or design a derivative contract for you. They leverage it as much as you wish. Of course, sometimes there are limits because, they look at your, how can I say, your credit health. But this is what will bring the system down again, because derivatives have not been fixed. With the abolition of Glass-Steagall in 1999, or the repeal of Glass-Steagall, it has allowed commercial banks to deal in derivatives. And is it any wonder that the huge crisis we've seen since then happened after that repeal of Glass-Steagall? So before that, commercial banks could not deal in these instruments, only investment banks. But now these banks can deal there as well. And I think that's the huge problem. Even Jim Rickards thinks that derivatives should be abolished. The financial derivatives, or bring back Glass-Steagall. That would be very easy, but easier said than done, because the banks now that control the derivatives market, they're in charge of DC. They've got the they call it political capture, or the lobbying power to keep that from happening. So there's something called in derivatives the notional value, which is, let's say you've got $5,000 and you can buy one future of gold, but that one future will control $130,000 of gold. So the 130,000 is the notional amount, while you only put down $5,000. So it's estimated that this notional amount worldwide is over 1,000 trillion, which is a quadrillion. So quite amazing. The BIS and the regulators, they changed the accounting of these derivatives to make them look smaller. So when you listen to or hear or read about it in the mainstream, you're told that it's about 600 trillion or 700 trillion, which is still huge. Seeing that world GDP is around, I don't know, 50, 60 trillion. I'm not too sure. US GDP is around 20 trillion. So it's a huge amount of betting on a very leveraged scale. So that's what I think will trigger things. When you get volatility like we're getting now, when asset prices go down, all the credit system comes under threat. So enough of that for now. Let's just see where we are this morning in the markets. It's just gone past 7:15 a.m. London time. We have seen a slight rebound here in the stock market, and we've seen gold and silver. They're quite steady. Gold did well yesterday. We broke through that, how can I say, the top of the falling wedge. So as long as we stay now above 1291 for the week, it is quite positive. Right now we got spot gold 1298.50. That's down $1.20. We closed just around 1300. Overnight it's actually made a new high. It's gone to 1303.50. The low's been around here, 1297. Silver's up 3 cents, 1479. Range has been 1468, 1484. Silver underperformed gold quite a bit yesterday, but still outperformed things like the stock market. The Dow is rebounded slightly. It's up 52 here, 25,376. It has been lower overnight. It's been about 150 lower. So it has been down like 100 points overnight. So it's recovered a bit. S&P up 6.25, 28.17. Nasdaq 100 up 18 or 1/4%. So yeah, the stock markets have stabilized. I've seen headlines that are saying that the Chinese government has intervened in the markets there. Maybe that gave overall markets around the world a little bit of a push higher. I know there were headlines yesterday about the Chinese retaliating with their own tariffs on about 60 billion of U.S. products. And they also noted that they have U.S. treasuries, so kind of threatening to sell some U.S. treasuries. What do I think about that? Well, they need to be very careful, the Chinese, because the U.S. government could basically freeze China's treasury holdings. Very easy to do. They're all held in the United States treasuries. They're not held in China. They did that to Switzerland during World War II, as Switzerland was a neutral country. I think Switzerland had around $200 million of worth of U.S. treasuries, which at the time was quite a big amount. And they froze that all throughout World War II. So it's doable. It's done in times of crisis. Are we there yet in terms of crisis? Maybe, who knows? But that's what I think about that, about the Chinese threats. Be bad for everyone. For China, it would be bad for the U.S. because it would show that you can't trust the U.S. Treasury, and other countries would be probably thinking twice about holding too many U.S. Treasuries. It'll probably help assets like precious metals, cryptocurrencies, which are doing really well, I've been, holding on to my cryptocurrencies, and it's starting to do quite well. Is it time to sell cryptocurrencies? I don't think so. We could go in a period where you just hold on to them, or the old saying, you hodl. So we've seen a huge move in the last few days in cryptocurrencies. So that's what it could help as well, in my opinion. What about the fiat currencies? Well, they're not doing much right now. I saw the pound actually lost quite a bit of ground yesterday, dropped through 130. Right now we're in 129.50, down slightly. The euro's holding on quite firm, 112.36 here. And the dollar lost quite a bit of ground against the yen. That's another interesting relationship there, or FX pair that you need to watch. The more the dollar drops against the yen, that's a sign of financial instability overall, because the yen is used a lot as a carry currency. A lot of people borrowing in yen to buy riskier assets. So if the yen is strengthening, that means that they're rushing to close out their positions and to pay back their yen. So keep an eye on that. Right now, dollar yen 109.56. It's up a little bit, up 1/4%, but it's been almost down to 109. Chinese yuan has recovered a little bit. It's now at 690. It made a high of 692 overnight. Oil still fairly firm considering everything. We've got crude oil WTI up 0.4 at 61.36, and we've got Brent up 0.5% at 70.13. So I think there is some kind of incident in the Persian Gulf yesterday. U.S. accuses Iran of attack on Saudi tankers. There's a lot of, it seems like things are getting a bit uncomfortable financially. It seems like the geopolitical tensions rise. Is it a coincidence? You decide. I know what I think is, the reason for it. Zero Hedge says, first it was the Gulf of Tonkin. Now it's the Persian Gulf. Well, some of you might know in 1965, I think LBJ accused the North Vietnamese of sinking a U.S. ship in the Gulf of Tonkin, 1965. And we found out that years later that I don't think anything sunk there, but that was one of the excuses, like the false flag to start to escalate the war in Vietnam. So be careful. The general public, I would say, don't look closely into these things. But I think a lot of people might get distracted with what's going on in the markets. The leverage, all the derivatives, that's a big problem for the markets, in my opinion. For the system, we could start seeing some accidents happen, some negative news in terms of what's happening in the economy, the credit system. That's, the system that could suffer. And the whole economic system is based on credit now. So these are interesting times, and let's keep an eye on things. If you enjoyed this video, make sure you hit the like button, subscribe to the channel if you haven't yet. Make sure you shared my videos far and wide if you think they're worthwhile sharing with people that could be interested in this kind of content. You can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.